Welcome back to Global Value. In today's video, we will be performing a stock analysis of Etsy Inc., ticker symbol ETSY. Easy to remember that one. Our stock analysis is going to give us a starting point of how to think about Etsy just by looking at its financials. So to start, at the time of recording this video, Etsy is trading for just over $93 a share. They've had it rough over the past year, coming down from its post-pandemic highs. Their stock has dropped over 50%. Even though they've had the significant recent drop, since Etsy has become a public company in 2015, they've still provided a 19.4% compounded annual return. Etsy is among these growth stocks that are hitting their new 52-week lows, and as we see here, Etsy has been cut off their 52-week high by nearly 2/3, so they are down quite a bit. Nevertheless, they're still a $13 billion market cap. Some background about the business: Etsy operates a top 10 e-commerce platform in both the United States and the UK, with sizable operations in France, Germany, Australia, and Canada. The firm dominates an interesting niche, connecting buyers and sellers through its online market to exchange vintage and craft goods. With $13.5 billion in 2021 consolidated gross merchandise volume, the firm has cemented itself as one of the largest players in the quickly growing space, generating revenue from listing fees, commissions on sold items, advertising services, payment processing, and shipping labels. As of the fourth quarter of 2021, the firm connected more than 96 million buyers and more than 7.5 million sellers on its marketplace properties. These properties include Etsy, Reverb for musical equipment, Elo7 for crafts in Brazil, and Depop for clothing resale. Etsy Inc. was founded in 2005 and is headquartered in Brooklyn, New York. We will be performing an 8-pillar analysis as popularized by Everything Money. Before we get into that fundamental analysis, let's remind ourselves of the 4 principles of value investing. Principle number 1, you're not buying and selling pieces of paper, and you're not buying and selling a number that goes up or down. You're buying fractional ownership of a business, and you should think of it as if you're buying the whole business. Principle number 2, insist on a margin of safety. All companies are worth the sum of all the cash they'll generate from now until Judgment Day, discounted back by some reasonable interest rate. If you could figure that out, then you should pay a price that's well below that. Number 3, Mr. Market. Your job is to make Mr. Market work for you and not the other way around. Mr. Market gives you quotes on businesses every few minutes. When he's providing you with quotes that are way too low, you should be buying from him. And when the quotes are way too high, you should be selling. And principle number 4, circle of competence. We don't deserve to make money by investing into things that we can't understand. That's just speculating. Unless we know the business inside and out and have a reasonable projection of what its cash flows are going to look like 10 years from now, there's no reason to invest in it. So with that mindset, let's get right into our analysis. Starting off with pillar number 1, we want Etsy's 5-year PE to be below 22.5. 22.5 is just a starting point, and if you wanted to factor in a higher PE for a more sustainable, higher growth rate, go for it. Currently, Etsy's trading for about 30 times earnings. Over the past 5 years, they've traded at about 60 times earnings. So this one's going to be an X. Pillar number 2, we want Etsy's 5-year average return on capital to be above 9%. They do a good job here. They average about a 12.4% return on capital. We can see that they had a big boost in this post-pandemic. Go into their income statement. Pillar number 3, we're looking for 5-year revenue growth. Etsy knocks it out of the park here. They've 5x'd revenues over the past 5 years. That's another check. Scrolling down on their income statement, pillar number 4, we're looking for 5-year net income growth. They do another great job here. They've increased their net income more than 6 times from 2017 to 2021. So that's 3 checks in a row. Next, for pillar number 5, we're looking at shares outstanding. We don't want companies to be issuing new shares. Instead, we actually prefer them to be buying back shares when businesses are trading for reasonable valuations. Looking at their shares outstanding, we can see here that Etsy has diluted shareholders. This isn't the worst dilution I've ever seen, but it's not great either. It's about 18% dilution over 5 years. What this means is that there are more shares outstanding, and that if you own the business in 2017, you're only entitled to 82% of the earnings that share would have brought you in 2017. Over the same period, they've significantly increased earnings, so earnings per share have still increased. However, if those earnings were flat, earnings per share would have been decreasing. So this one's going to be our second X. Pillar number 6, we're looking for 5-year free cash flow growth. Guys, they've almost 10x'd their free cash flow, going all the way from $65 million to nearly $640 million. Huge check here. Their average 5-year free cash flow comes out to $348 million a year. So this is going to be useful when we're looking at how they employ debt. Pillar number 7, we want Etsy's net debt to be below their 5-year average free cash flow multiplied by 5. So Etsy has $1.4 billion of net debt. Multiplying their roughly $350 million of average annualized free cash flow, that brings us to $1.74 billion. So this is going to be another check. If they had the same free cash flow profile over the next 5 years as they did over the past 5 years, they'd have more than enough money to pay down all of their debts. Finally, this brings us to pillar number 8, the big pillar of them all. We want Etsy's market cap to be below their 5-year average free cash flow multiplied by 20. So as we mentioned earlier, Etsy has a $13 billion market cap. Multiplying $350 million of their average annual cash flow times 20 brings us to $7 billion. So according to that metric, their market cap would nearly have to fall in half. So that one's going to be another X. In summary, Etsy checks the box on 5 out of 8 pillars. They are a rapidly growing business that's been boosted by the shift to online commerce by the pandemic. They miss out on our valuation pillars, and they've been diluting shareholders, but they've still grown earnings at a very high pace. If you want to learn more about Etsy, I recommend checking out their 10K and reading through their annual report to better understand the business and to understand whether or not they have competitive advantages. Personally, I like Etsy. I'm not a shareholder, but my advice here is to be patient and work to understand how durable their future growth is and how durable their platform is compared to a lot of this other e-commerce competition. Well, guys, that's it for today's fundamental stock analysis of Etsy, ticker symbol ETSY. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what company you want me to take a look at next. Thanks for learning about Etsy, and have a great day.